Welcome to this short video on one of the most important aspects of expat life, sending money home. I'm Stuart Porter, Chartered Financial Planner and long-term expat based in the United Arab Emirates. Exchange rates can be very volatile, but since the beginning of 2022, the US dollar has strengthened against the pounds considerably. And this has led to an increase in inquiries about how best to send money back to the UK. So is now a good time to transfer? Whilst no one knows what the future holds, the current US dollar sterling exchange rate, and so dirham sterling exchange rate, is historically very good for dirham holders wanting sterling. So having established that the exchange rate looks favourable, what expats now need to know is the most effective way of transferring money between their country of residence and their home country. Getting this right could save you thousands over the course of your overseas posting. Most expats have many reasons to transfer money overseas, from meeting bills in their home country to savings and investments in other jurisdictions. So whilst most of our countrymen only think of exchange rates when they're preparing for an overseas holiday, for us it is an almost monthly consideration. There are three main ways of transferring money overseas: bank transfer, credit card, and exchange house. In all three cases, the financial institution debits your account with local currency amount, converts it to the currency you want, and sends it to your chosen destination. Let's have a look at the bank transfer. This is probably the most convenient form of transfer, but one of the most expensive. In addition to the difference between the buying and selling price of the currency, which is about 1%, there is usually a flat fee charged by the sending bank, possibly the correspondent bank charges, and perhaps a fee by the recipient bank too. Credit cards are most commonly used for online purchases. Often, the costs of goods and services online are in foreign currencies. When charged to your card, most banks will charge an extra fee for a non-dirham transaction. This could add up to 4% onto the cost of your purchase. Exchange houses are a popular method of sending money overseas with expats, especially when sending larger sums. These are businesses specializing in currency exchange. They can send money abroad as well as exchange foreign currency notes. These businesses tend to offer better rates than banks. For example, one leading exchange house charged 0.6% on a recent transaction, saving £400 on every £100,000 transferred, compared to a typical bank rate. So what's the best option? Banks and credit cards offer a great deal of convenience, however their customers do pay for that benefit. For many, the additional cost for small transactions may be a cost worth paying. However, if you're sending a larger sum, the additional work required to use an exchange house may be time well spent. AES has recently partnered with an exchange house to help clients reduce their currency exchange costs. It is possible to manage your exchange rates. Many people are familiar with the idea of a fixed interest rate for their mortgage. You may not be familiar with the idea of buying an option to buy foreign currency at a fixed rate for future use. For example, you have a mortgage in the UK costing £1,000 per month. The property is not let, so you have to send £1,000 a month back to cover your UK mortgage. Each month the dirham value changes, making budgeting difficult. It may be possible to buy an option from your bank giving a fixed exchange rate. As current rates are low, this may be a good strategy for the next 12 months. Each month you can decide whether to use the fixed rate or, if the rate is better, the market rate. At the end of the year, you sell the currency back to the bank, and this may result in profit or loss for you, depending on the market rate at the time. Either way, you will have been able to budget more effectively during the year. Exchange rates can have a huge impact on the cost of living as well as investment returns. They are an additional complexity of life that those living in their home countries rarely have to consider. Transferring money across borders is a cost we expats have to bear, and knowing the most efficient way to transfer money can save us a lot over time. Making sure your portfolio is aligned to the correct currency is a key part of successful portfolio construction. That's it for this video. Please like and subscribe, or contact me if you'd like more information. And thank you for watching.